As a 7-figure 31-year-old dividend growth investor that has a substantial amount of money invested in rather higher yielding assets, I often get asked questions and critics asking me why I invest in relatively higher yielding stocks and ETFs even though they are sometimes less tax efficient and offer a smaller total return. Well, in this video we're going to dig deep into some of my main reasons on why I invest in higher yield even as a younger investor, and why I think more and more young people over time will also follow a path like this one. So if you're a long-term investor who has thought about investing in higher yielding assets, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first, before I give my exact reasoning, maybe it'll be helpful to show you my exact portfolio. And right here is my master dividend tracker, and side note, you can of course grab yourself the same exact tracker to track your very own dividend progress. It's the first link down below in my description. But throughout this portfolio, you're going to see that there's certain names like, say, my 1,000 shares of Apple that of course don't offer that much yield, and most investors buy Apple strictly for the growth. But there definitely are some higher yielders in here. Take Jepi for example. I have 1,248 shares of Jepi. I also have quite a bit of Verizon stock, and even though not every single position in this portfolio is what I would consider high yield, a lot of the names in this portfolio can sort of lean that way. Now, to make things really easy, I sort of made a diagram just to show you exactly my thought process on some of the pros and some of the cons and my take on it when it comes to investing into some higher yield. And of course, I want to hear from you guys down below. Drop your comments when it comes to a younger investor invest into relatively higher yielding assets, because of course I want to know what everyone thinks. So first off, let's go through some of the cons, or some of the potential cons when it comes to investing into higher yielding assets. Like some of the ones I even showed you inside my portfolio, take names like Jepi, JepQ, qyld, etc. So first off, this is what I came up with. You need more money to make it feel like it's worth it. So what I mean by that is, because by investing into higher yielding options, you're not necessarily going to get that large of a total return. So an investor might feel like they need more invested to make it feel like it's worth that strategy altogether. Now, another con when it comes to higher yielding options, and this is sort of real across the board, but of course I'm not an accountant and everyone's taxes are different. So that's also why on this channel, I never like to talk about taxes in the first place. But one of the cons are taxes. Some of the higher yielding ETFs, for example, are not given the best tax treatment compared to a stock that maybe offers a qualified dividend, or even a stock or ETF that doesn't pay a dividend at all and just offers growth long term. Now, another con when it comes to investing into higher yield is that there's less total return. Because a lot of these higher yielding options do give you cash flow a lot sooner, and because these options likely have less growth. And again, I'm just talking in generalizations. There's of course cases where this is of course not true, but I'm just saying generally speaking. So as an investor investing into higher yielding options, you have to be okay with the potential that these options might not give you as much total return compared to something that might have more growth potential and less yield. Now, the last con that I could come up with is that there's a risk of a dividend cut when you are chasing some higher yield options. And of course, I've seen different stocks and ETFs also cut or change their dividends when they're not super high yield. But a lot of times, again, generally speaking, when you are investing for higher yield, there is the risk that, of course, dividend safety could be put on the platter. Now, some of the higher yielding pros that I came up with, and these are some of the main reasons that why, for me personally, as a 31-year-old investor, I choose to invest into higher yielding options. Now, for one of the main reasons, and this is probably a reason that a lot of investors choose to invest into higher yielding options from day one, is because you get cash flow basically today. By investing into higher yielding options that say pay 5, 7, or even 10% yield per year, for every $1 or $100 that you invest into that asset, you're going to see a lot more cash flow on a monthly or a quarterly basis compared to someone that only offers, say, 1, 2, or 3% yield. Now, again, there's pros and cons to everything, and it doesn't necessarily mean that a higher yielding option is necessarily better just because it offers more cash flow today. But depending on what your strategy is as an investor, and towards the end of this video, I'm going to share with you my exact strategy. The cash flow today, the income today might be a better option for that investor. Now, the next pro that I came up with was that it's very, very motivating to invest into higher yielding assets. Now, the reason being for this is that, once again, if you're solving for cash flow, if you're looking at your entire investment portfolio and you're trying to figure out how can I get this portfolio to pay me as much cash flow as possible on, say, a monthly or quarterly basis while still maintaining a safe dividend yield across the portfolio, and of course still having some upside potential throughout different areas in the portfolio. Now, investing into higher yielding options is definitely motivating because for every $1 or $100, like I said a minute ago, that you invest into some of these higher yielding options, you're going to see your estimated annual income move up substantially. Now again, this is also all going to change on whether you have a ton of money to invest into right off the bats, or maybe you don't have all that much money at all. But again, just generally speaking, I find it much more motivating when I buy into something higher yield because again, what I'm personally solving for is cash flow, and that's over a monthly and yearly basis. Now, the last pro that I came up with for higher yielding options is FI, or financial independence or freedom, can come much sooner. Now, financial independence can mean multiple different things, of course, but basically speaking, if right now my total monthly dividends are currently sitting at just around $6,000 per month, let's say, and of course some of these dividends are variables, so there's going to be months where my dividends are a little bit higher and lower, but let's just say for the sake of an even number that I'm earning $6,000 per month on average on a monthly basis. Now, if my bills, let's say, are at $5,000 or $5,500 per month, those are my bills to cover everything, all my life expenses, etc. Well, if you're an investor with, say, $6,000 or $7,000 or $8,000 per month of dividends, well, at that point, you'll be financially independent. Because at that point, of course, in theory at least, you can never have to work again, and you could have all of your passive income, all of your dividends on a monthly basis, cover your bills, and then some. Now, that brings me into sort of the main reason now why I personally have chased a little bit higher yield throughout my portfolio, which of course, like I said, I still do own a ton of SCHD, I own a ton of Apple shares, I also do own some physical real estate, I have other assets that aren't all high yield, don't get me wrong, I'm definitely not what you would consider a income focused investor, but I do have a liking for cash flow. Now this is because at 31 years old, even though I'm not looking to retire today or tomorrow and use all these dividends to pay for my bills or pay for my life, currently as of right now, I am reinvesting all my dividend income into buying more high quality different dividend paying stocks and ETFs. That's my strategy as of right now. But very soon here, maybe in the next 3 to 5 years, which I consider relatively soon, I am going to be looking to use some of my dividend income to help for things like bills or to travel or just to have some extra money for really whatever. Now, this is a very important piece of my strategy because of course I could sell everything and just buy shares of Apple stock. And maybe just by buying those shares of Apple stock, it'd be able to outperform all the different higher yielding stocks and ETFs throughout this entire portfolio. But that would of course be basing me on timing the market and hoping that Apple stock goes up to a certain point within the next, say, 3 to 5 years and able to then sell off my Apple shares and retire off of the return from the Apple shares, or really whatever that looks like. But instead what I'm doing is I'm slowly stacking up high quality different stocks and ETFs in different industries and different areas in the markets, and instead looking to grow my dividend income on a monthly basis higher and higher until I become more and more comfortable to the point to where I'm actually willing to use some of my dividend income to, like I said, use for things like bills or just life expenses, etc. But now, most importantly, I want to hear from you guys down below. I want to get a read in the community if you personally are solving for building out a portfolio that's relatively higher yield or lower yield. Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.